Never stop learning, right? We've talked about a lot of things. We talked about highest and best use. We talked about some pretty advanced stuff with real estate.
Thanks for tuning into the Highest and Best Use Real Estate podcast, where we talk about techniques to optimize your land, structure, skill sets, and time, as well as the highest and best use principles to make your business more profitable, productive, and efficient. I'm your host, Ryan Carr, reminding you that good deals are found, great deals are created. And today, the man, Erwin Szeto, is on the show. Really excited about this. Erwin's been a friend of mine for a long time. He's into the Stock Hacker Academy. He's doing iWIN. He's doing real estate. He's doing all kinds of different things. And he does this with his wife as well. So, Erwin, thank you so much for being on the show.
Thanks for having me, Ryan.
What's keeping you busy these days? I feel like that's the question you always ask me. So I have to throw it back.
What's keeping me busy these days? It's summer, so I'm trying to enjoy it.
In terms of the family life, you guys just moved.
Yeah, we moved during the pandemic, just because when we looked around our house, what kind of budget, what we needed, we hadn't renovated our home. Like classic real estate investor, highest and best use of our capital is not in our home. So all our money had been deployed, luckily we've done very well. We have an 8-figure real estate portfolio, and it's done extremely well. Almost all my wealth is created through real estate. And so we were looking around the house we're just making a wish list of all the renovations we wanted. It worked out to like $300,000. So then we actually just ended up buying a house with all the fixings that we wanted for $300,000 more than our house than I sold it for. So highest and best use of money is to borrow it for cheap.
I love it.
We're borrowing money for like less than 3%. Like, why not? And we got everything we wanted in our wish list.
You know what's cool about that too is that instead of renovating and spending the cash, let's just say you bought your house for, 20% down. Is that reasonable?
The current house, we put down a bigger down payment than that. We made so much equity in our previous house that we had a sizable down payment.
Well, it's cool when you can buy that on leverage, right? Because you're not putting the 300 out in terms of like cash into a renovation. You're able to buy that with a little bit of leverage, thereby maximizing your dollars. Would that be fair to say?
Yeah. Well, I actually have we're talking about down payments. Now, I'm not a financial advisor. I would never advise anyone to do this. When we bought our home, the first home Cherry and I bought together was in Burlington. I put down 5%, right? Principal residence, moving in, everything's legit. Luckily, we had a full in-law suite, so the income helped us qualify. So I put down a total of like $37,000 between CMHC, insurance, and everything. That's it. Less than $40,000 I put down. Paid $635 for that house. Right. Wow. With my remaining capital, we went and bought 3 other income properties. Right.
Mm-hmm.
And then when I went to sell that house to buy our house in Oakville, I sold it for 1.3 something.
Oh,
right? So I put down less than $40,000 for a capital gain of a lot of money. Right. Over $700,000.
Yeah.
Right. So I took a massive risk. Again, we're talking about highest and best use of capital. Obviously, significant risk involved. Risks were mitigated because I was able to rent out my basement to tenants, so I was able to generate income, cover part of that mortgage, and we deployed all our extra capital into income properties, they're either student rentals or duplexes, so they all cash flow. And I remember doing the math. It's like the annual return is like 4 digits, I think, right? So obviously, all heavily debt. Again, I'm not a financial advisor. I can't tell anyone what to do. This is what we did, though, right? And it worked out. Thankfully, it worked out.
So tell the listeners at home about your business, the various facets that it has, and sort of how that came to be.
Our businesses, the easiest way to talk about our businesses is from the start at the top level. Everything that we've always done. And the best way to describe what we do now is we attempt to be the Google Maps for everyday hardworking Canadians to get on the shortest, fastest path to whatever their financial goals are: stability, security, freedom, right? So among my businesses with my wife, we have an accounting practice that serves mainly real estate investors and a whole lot of realtors. I have my real estate practice. So I have 6 investors who are also licensed real estate professionals who coach regular people on how to buy income properties that cash flow. And I also have a Stock Hacker Academy where we teach value investing, option investing, a lot of best practices around that. Because for anyone who's rich, they all have a lot of money in the stock market, a lot of money in real estate, and they need a lot of help protecting their wealth. Because it doesn't matter how much you make, it's all about how much you keep. And with the way our government spends their money, my friend of mine lives in a very, very rich area of Etobicoke, and she received in the mail a $50 gift card from Loblaws, funded by the government, funded by a government, right? Why are rich people getting gift cards, right? And I'm getting a Tesla next month, and it's heavily subsidized. I get a massive tax write down on my income. Why am I getting a massive tax write down on a $90,000 car? Right? The government does the weirdest things with money. I don't agree with it. A lot of the good things that are for tax purposes, like paying for roads or hospitals, education, that's fine. But there's tons of waste as well. So I think it's a good practice to minimize your tax liability. Pay what you're legally obligated to pay, not a penny more, is my point.
For sure.
That's all I get. So my wife has an accounting practice for that purposes.
It's great when it's in-house, not just the commercial house, but like in your own house.
You know your accounting bill, right?
Yeah.
Mine would be probably not as bad. And also, because my wife is in-house, she deals with the bank to get all of our mortgage money too.
Oh man. Okay, I'm jealous. I'm jealous of that because that is such a headache. Trying to qualify for this bank, different criteria, all that stuff. She can handle all that stuff. That's amazing.
Because when the bank calls, I don't know which income they're qualifying me on. So I'm like, can you just speak to my accountant? Happens to be my wife. And so they'll do that, right? Right. So I'm sure many people would love to just put their accountant between them and the bank in order to make their, because my accountant has all of my facts on hand, right? Versus I don't. They're much more organized than I am. They know where all my documents are. And again, I think every big company would have that, right? The CFO speaks to the lenders, not the CFO, not the CEO, right? Yep. So I'm lucky to have that in my life.
So what came first for you? Was it real estate? Was it an interest in stocks? How did that come? Like, how did that divide happen?
Because I came from a business school background, I started in stocks. Just my timing and luck has been terrible because I graduated right after 9/11 in 2001. Like I remember I was in second year university. Sorry, I was in my fourth year of university when that happened. So I graduated into like the worst market ever. That was also the .com bubble burst. So all you ever heard about was stocks just like many companies went under, right? And then when I got a job, I started working, putting some money away. And then I was putting more and more money into the stock market, mutual funds, whatnot. And then the financial crisis happened. Like I had a stock go to zero, but also at the same time I had some small real estate. I'm like, oh my God, financial crisis. Oh my God, we have these 3 houses. What are we going to do? And then the reality was, it was a credit crisis. No one could get mortgages. It's not as bad as today, where interest rates are going up. So it's less affordable. So what happened was we were like all worried and like, oh my God, a tenant gave us notice, they're leaving. And then when we put it up for rent, we like the first day we got like 5 applications. Like, oh, this real estate thing works out pretty good, right? I thought the world was falling apart. So my experience during the financial crisis was actually a very good time for money making in the real estate world. Because my experience wasn't good in the stock market, I did not realize that was an opportune time to be pouring more money into the market. So that's a pretty great regret of mine, along with not getting into crypto earlier. But it's tanking pretty hard now, so it'll be probably hopefully a good opportunity to get in. But yeah, so I think diversified for me, because where I am now, I was sharing with you one of our stock hacker students. He's because he wanted a lot of more freedom in his life, he sold off all his investment properties. So he's got 7 figures, and then he put half of it into dividend paying stocks, and now he's generating 5 figures of cash flow. Very low 5 figures, but still, if you're making 10 grand without lifting a finger in cash flow a month, that's freedom to me. right? So I think most people would appreciate that's freedom. So like I'd like to get to that point as well. I'm making a ton of equity gain on the real estate side, but not the cash flow, not near the cash flow that I want, not nearly 5 figures a month. So that's why I think it's important, at least for me where I am in my life. I want it all. Like I want a decent crypto portfolio. I want a sizable stock portfolio that cash flows, and a real estate portfolio that's, pretty easy. Right. Yeah. And I mean easy, like I have pretty tough skin. So, I'll do a triplex conversion, for example. But yeah, that's me. That answer your question?
So where are you finding the edge right now in the market? Is it on the stock side? Is it on the real estate side? Or why don't we drive down the path of both? On the real estate side.
I think right now, because real estate's so imperfect, you can find extremely motivated sellers. Right. The analogy I give for where we are right now in the summer of 2022 is it's a lot like Christmas. It's a lot of the Christmas season of real estate, where again, I've been a realtor since 2010, so I've been around for a while. Every Christmas, if someone has a market for sale, it's because they have to sell, right? And there's no buyers because everyone else during Christmas, everyone's focused on family, on travel, on Christmas shopping, right? Spending money, not on real estate. So that's what this summer feels like as well. The buyers have all disappeared. The mainstream buyers have all disappeared. They're fatigued from the run-up that we had. And again, if you can find a motivated seller, you can get a ridiculous deal. The CMHC just in the paper today, and just note CMHC, I find they're the most conservative, often wrong, on the wrong side, often low. So for example, they predicted that prices would come down like 8 to 15% during the pandemic. So they were wrong the completely opposite way. And now they're predicting that we'll get back to peak prices in 2025, right? So
as in back to where we were 6 months ago.
They're saying we're going to back to peak or past by 2025.
Wow.
So the most conservative economists out there think it's going to go back, right? So
you think it'll go there even with the current interest rate environment, or do you think interest rates will have to roll back a bit to run back up?
So I follow here Jim Rickards as well. So he's also an extreme bear. Like he's a big gold bug, for example. And in his book, I forget which one, it might have been Currency Wars, where he spoke about. So he's ex-CIA, like financial terrorism, like super smart, way smarter than I am. He made there was a paragraph where he mentioned that for the U.S. government to save a recession, they need to be able to cut the interest rates by 4%, right? And that's why the central banks have been trying to raise rates, right? Not only to fight inflation, but also they need to build up that buffer so they can cut it again to save a recession, right? So I don't care what the central banks are doing right now. I do and I don't, but they're going to raise rates. But the reality is still that the real inflation will continue to be higher than what other interest rates are, right? Partly it's just how government works. They want to underreport inflation because then they don't have to pay out as much. They don't have to adjust as many things on all the social welfares and whatever out there paying out, right? They want to have an understated inflation rate. So whatever. Right. So inflation reality, I've always felt for the last 10 years at least, I've always felt inflation was higher than what was reported, right? Especially in housing, because I saw it firsthand. But anyways, my point is inflation is going to continue, especially with all the offshoring from China. I just expect it. There'll be less globalism. So prices have to go up. Interest rates have to go up to combat it. And then eventually, to save the economy, they're going to have to eventually cut interest rates again. And then again, we still have our supply issues, right? Like CMHC, like again, the most conservative group there is in terms of economists. They keep several times in an article, we have supply issues, we have supply issues, we have supply issues. And that doesn't change.
It doesn't. Well, it's even harder now with, you look at things like, the price of lumber. I just priced out some concrete the other day. The price of concrete has doubled from last year. And you might not think, well, it's a big deal, but I did a quick back of the napkin calculation yesterday on the cost to build a new house, and it's up 45%. That's huge.
Has it come down at all?
That's like across the board. If you aggregate all of the materials and some of the labor, you put it all together, you're about 45% on average. Like Lumber was higher. Lumber went from like 250 a stick for, a 2x4 to like $10. Now it's back to $6. So, I mean, that's, you average them all out, but yeah, 45% just for the structure alone.
Right. And then we're talking about supply. Builders will not build unless they can make money.
Yeah.
Right.
Yeah.
So if prices don't go up, they're not going to build and there won't be any new supply.
So are you seeing that, like you're in the Hamilton market, are you seeing that where builders are becoming a little bit more conservative right now? Are they being a little bit more aggressive right now because prices are coming down? How are you seeing the market from the real estate agent perspective?
It's all over the map. For example, I was having lunch with someone that works for one of the massive condo developers, and their prices are $1,700 a square foot. That's what they're selling for, and they're still selling them. So I asked him, so we were talking about interest rates because he's an accountant by trade, so he's no dummy. Talking about interest rates, he goes, well, interest rates don't matter when you're paying all cash. Who's paying all cash? Foreign investors who could be money laundering. So it's not local Canadians. So my point is that there's no one story as to what's going on, because I don't know anyone personally who buys all cash. So his experience as parking for a builder is very different than mine, right? Mm-hmm. On the streets, in speaking to people who deal with new construction and speaking to lawyers, there's all sorts of trouble with people closing and getting financing.
Sure.
Especially, and more so it seems in the resale market. For anyone who bought pre-construction, they got cheap enough 4 years ago, whatever. They seem to be okay. The people that are really hurting right now is the novice buyer who bought earlier this year, and then their prices are down 15%, and they don't have the down payment to cover that appraisal shortfall. And I'll just add that I am really, really disappointed in how poorly these deals were executed by the people involved, right? I think it's inexcusable because I was advising all of our clients in December, January, February. I was advising them all, if you plan on selling in the next 12 months, you need to sell it now, right? Versus all these other people out there were still shopping and outbidding people, like even if they're the 20th offer or whatnot, right? So if you do that, get your appraisal now, right? Don't wait. Yes. Don't wait 4-6 months for your appraisal to get your appraisal done, because I knew where the market was going to go, right? Like just being a simple student of history, every time the government's intervened in the real estate market, buyers try to get ahead of it. And then once that piece of government legislation goes in or interest rate increase, the market tanks. This happens every time. So prepare for it. And then, so thankfully, my experience with our own clients is not the same at all as the rest of the market.
So what's missing in the market right now, both for people who are buying real estate and people who are selling real estate? Like, where's the gap?
Where's the gap, as in like where's the opportunity?
Yeah.
Again, looking for motivated sellers. Like we picked up a client of ours with our helping our client of ours. We picked up a house for low 500,000, a big 1.5 story. To me, it's big because we don't deal with like large square footage properties for investment property. We always focus on starter homes, right? So we bought a 1.5 story house in Welland, 1,900 square feet, plus basement. And to our surprise, we offered under asking, and the sellers accepted the first offer. So we were all like, what? Low 5. Whereas 4 months ago, it probably would have sold for over 700,000.
Was that an emotional problem, or was that a financial constraint that somebody had and they couldn't escape it?
Don't know, because if your agent's decent, they're not disclosing these things. So this is just an MLS property. And like my point earlier was, if you're selling now, you need to sell. So these folks are obviously motivated. Our client actually got an additional $10,000 off to waive conditions based on what we found in the inspection. So yeah, we have full conditions. It's
interesting.
Yeah, that's how much. 4 months. The difference in 4 months. Again, so we're getting the house for over $170,000 cheaper than 4 months ago. And now my client's going to turn that around and turn it into a triplex, all within the existing building envelope. Because it's 1,900 square feet plus basement, right?
Yeah.
and it's in an area, it's in a city that allows for triplexing, and it's in a really nice neighborhood. It's probably the best, possibly the nicest neighborhood of that city, right?
So would that be highest and best use for that particular area, is to go 3 units instead of like the previous maybe 2, which was more common a few years back?
Absolutely, especially when you have 1,900 square feet plus basement.
It's big.
Right? And because before, when the market was going up, we were always looking for properties with options. So we were looking for houses we could duplex plus a garden suite, right? Now we can, with this property, we can do it all within the existing building envelope. We don't have to build an addition. So there's like, we don't have to spend as much, right?
That's the most expensive part. Like, A, you've got to figure out your zoning, but B, is adding square footage is the most expensive thing to do. Right. So if you've already got, would you say 1,900 square feet of building envelope? I mean, to do an interior reno and not have to touch, windows, roof, foundation, all this stuff, like it's cosmetic at that point. A little bit of framing, maybe a bit of structural, but like that's amazing.
Maybe an egress window or two, but hey, it's better than putting on an addition.
Yeah.
So yeah, it's funny because like this level we consider cosmetic versus, but yeah, that's probably highest and best use. Like we don't want to tear down the property. We can get Schedule A financing. Like it's all fantastic, right? Maybe we'll go private lender. We'll see. Well, it'll be up to my client. Maybe we do like a 6-month open mortgage for private, and then go get a Schedule A cheap financing, and then this property will rent for over $5,000, right?
How would you teach your clients to think? I mean, at this point, they've got to be thinking like, what's the cash flow? What's the market like? What's my tolerance for risk? I mean, like, how do you coach your people to say, okay, this is the way that I'm thinking, or this is the way that experience teaches me to think? How do you parlay that to a client so they can think like you?
We always share with our clients what we own or what our clients have recently purchased on. So that's how we kind of set the baseline, right?
Like for example, we do
lead by example, and the term in marketing is called social proof. For example, as part of our process working with investors is we do tours of cities. We charge $20. We used to be free, but then people didn't take it seriously. We're actually in your neck of the woods this weekend. We're going to be touring Belleville. But anyways, point is that we take our clients around, or even prospective investors around town, and say, we actually show them real property, and actually while we're showing them as well, like, hey, that house across the street, our clients own that and it rents for this, and the tenant profile is this. Was that what you would like, right? And then it's yes or no, and then we can tweak from there, right? So we give them a baseline, we tell them what we would do. Like I think a lot of my clients know where my properties are because we tell the story so often, right? And then it's up to the investor to decide what's right for them. Like for example, like my kids are young. We have 3 businesses plus a real estate portfolio. The last 2 properties I bought were turnkey, right? Yeah. That just fits my best use of my time, because time is the only thing is the only thing that you cannot exchange, right? You cannot get it back. You can't. So again, my point
sometimes
is
sometimes you can't even build it for what you bought it for.
That too. That's exactly true, and also like the process of. So say you do a wholesale deal, you do the reno, like you have your own staff. I'm not ready and willing to do all that, put up all that upfront effort to build relationships with wholesalers, or to start my own wholesale business and to have a construction business, right? So I'll pay someone like you, I'll buy it from you, right? Like if you operated in my town and you had one of your side-by-side duplexes for sale, I'd probably buy it off you. You can make your spread. I'll go use cheap money and hold on to a hard asset, right? Yeah. So everything that we teach our clients, we talk to economics as well. Not everyone wants to hear it though. It's funny. I feel a lot of real estate investors just think that you just buy real estate. It's just like a stock. It's just an investment. Not everyone understands everything that drives the decision for me. Because again, I come from a business background. I took economics for 2 years as well. So everything that I've studied in my life, and I read a lot, drives the decision that you need to own hard assets. So then, whatever hard asset you want, you like NFTs, you like Bitcoin, you like Ethereum, you like stocks, whatever, right? Choose one, research it, choose one, right? And then always try to get better at it. Because that's been my journey. Always try to get better. Because I remember when I started, not knowing much and just reading some American content, a private seller approached us like, oh, private seller, we're going to do great now. Oh, it's a duplex. Oh yeah, this is a deal. Well, we didn't without having much context and being a young investor, a newbie investor. I didn't know what a problem. How it was one of the original properties for that neighborhood. So it was like 1880s, an 1880 build with a tree-long foundation.
Yeah.
Dirt floor, everything was knob and tube and galvanized steel. Didn't know, but it's a private deal, so I stayed the Realtor commission, and it's a multifamily, so it's a legal duplex. So worst deal I ever did. Thankfully, I got out with about 17% return, just thanks to the market. My point is, though, I don't even know what my point is. But again, my journey started making mistakes. Thank God for real estate. I still made money. But then my journey's always been to improve as an investor, always be networking, always be reading, and then learning about highest and best use. So, every property I look at, looking for highest and best use of not just the property, but also my capital.
Is there anything in those properties now, if you evaluated your portfolio and said, okay, even the same thing with stocks, but I mean, like from the real estate perspective, is there anything in your portfolio that you can say, okay, I've had this house for so many years, we could either renovate and fix it up, or we could sever the land, or we could do anything creative with it? Have you ever looked at those opportunities within some of the stuff that you already own?
Oh, absolutely. I always reevaluate. Like for example, I mentioned garden suiting earlier. So we freed up a bit of capital, refinancing some of our properties, and then again, what's my highest and best use of this capital? I could go and build some garden suites, or it cost me almost the same as a down payment on another property.
True. Good point.
Right? I know it won't cash flow me as well, but because of my financial situation, having 3 businesses that are doing pretty well, cash flow is not nearly as much a concern as for me. I don't need a big amount of cash flow. My strategy for where I am in my life is I need a bit of cash flow so the bank still likes me, so that they continue to lend. Continue to lend to me. So that's kind of like my criteria. So again, if I can keep buying properties that will cash flow, make the bank happy, then that's where I'm good to grow. Because part of it is I don't want to go too far from my home to buy property, because my team is primarily in Hamilton and St. Catharines, and I don't want to build out other teams for other areas. Just life is short. I only want to manage so many relationships. I have enough relationships to manage.
Okay, so let's try on that.
always reevaluating. So you mentioned for example, one property I own JV. I only have one property as a JV, right? It was early in our career, so it's 50-50 everything. So my money is in it too. So that would be the first one I'd let go, because it's not the highest and best use of that capital when I'm giving up half of the equity, when I have half of the equity gains. And I'll probably rotate that into the stock market, looking to buy some dividend payers that will return me cash flow and also not create any headaches, right?
Yep. No maintenance.
No maintenance is fantastic. But again, I have an 8-figure portfolio. I don't think that's what a newbie needs. I think a newbie needs to get their hands dirty, and especially if you're young and no kids, go nuts.
That's what we did. We didn't have any kids. We still don't have any kids. But I mean, we just went in there nose deep and said, okay, we're going to learn this. We're going to figure it out. Fortunately, the market was very forgiving. It's been very forgiving for everybody for the last 20 years, give or take. It's been very forgiving that way. So if you made a few mistakes, you mentioned it earlier, market just keeps kind of going up. And now we're at a point in the market where it's not going up, and people are kind of not really understanding why that might be. Do you see that in your clients too? Are they going, this is new?
Not our clients. Our clients are pretty chill. Even when the pandemic first broke, I think we only had to talk 2 investors off a cliff, off a ledge. Do we have time for a quick story? It's a pretty funny one.
Yeah.
A client of ours asked to get on the phone with me, because I don't work directly with clients as much these days. I haven't worked directly with clients for close to 7 years. It's just my role in the company. But they asked to get on a call with me, happy to. That's weird. I think it was May 2020. So pandemic, it's everyone's stuck at home, whatever. Anyways, I get on a call with my client. He goes, my mentor sold off his entire portfolio of apartment properties. Erwin, what are you selling? I'm like, I'm not selling anything. Oh my God. I'm thinking, oh my God, his mentor is way more than I do. And he sold everything. And then I'm being complete contrarian. So I explained to him, because my concern is if this is the wrong time to sell and everything bounces back, because we still have the same underlying issues. We have cheap interest rates. We have supply issues in terms of housing. I said to him, if I'm wrong, it's going to cost me so much money to get back in, right? And that's the risk I'm not willing to take. So I could not believe that he followed my opinion rather than his mentors.
Really? The paid help?
And then he actually ended up buying 2 more properties that year.
Wow. Are there any contrarian thoughts that you feel strongly about right now that other people don't agree with you on?
So being in our community of real estate investors, I find it interesting how many people are opposed to stocks. And I was actually on a call with a good financial planner who actually invests in real estate as well. And he was sharing with me some research as well, showing how like the ultra wealthy, they actually don't have that much real estate. And the more wealthy they get, the even less real estate they have. And that got me thinking, wow, what did they know that I don't? And then it got me thinking about it. And this was only like a week ago. And it got me thinking about it. It's because what I think it is that when you have a ton of money, you want to be less active on your investments. And real estate does not scale the way financial instruments do, right? True. Like owning a large basket of like dividend paying stocks, like even like boring stuff like TD Bank and Enbridge and CN Rail, that sort of stuff. You can probably own millions of it and not lose any sleep. Versus, I know lots of people own millions of real estate and lose sleep over it.
Sure.
Right. So
because of the effort to maintain.
Yes, the effort to maintain, the challenges of getting financing, of course, the just tenant issues, and then contractors, everything. Like it's running a business, right? Even if you're passive, I've known passive investors who've sold off everything as well, right? So I think it is the path eventually for more and more people, especially in Ontario or any sort of very socialist government where the laws are in favor of the tenants, that a lot of people will get out of this in favor of financial instruments that pay dividends. Now, I'm not putting much money into the market these days. I pulled a bunch out, actually, thank God, thanks to the people that the mentors and the people who help us teach Stock Hacker Academy. Their timing proved to be very, very good. That it was a good time to pull a lot of money out of the market back in December, January, February, which I did. I wish I pulled out more. But I have cash on the sidelines waiting to go, I think maybe later this year. Right? That's obviously not advice. That's just my opinion. No one has an answer. No one has a crystal ball. But yeah, I have a fair amount of capital on the sidelines waiting to go.
How long have you had a coach for?
Depends on which one.
Okay, well, for your whole career, for your business career, really, because it's so multifaceted. I mean, you have coaches in various areas of discipline, disciplines.
And then on top of that, I consider some of these best-selling authors as well as mentors of mine. Like I've taken all of their programs. For example, Brian Tracy changed my life with his book, Maximum Achievement. This quick segment of that book, it as an exercise. And I recommend everyone do this exercise, find some quiet space and then ask yourself, if I removed all the negative thoughts, all the self-limiting beliefs I have, what would I be capable of? Right? So I'm a big fan of superheroes, but I have no special powers. But what I realized...
Can't see behind walls? I thought you could see behind walls.
Can't leap over tall buildings, nothing like that. Not even that smart. But as I've grown older, I realized that I have a decent talent at making money, right? So that's sort of my superpower. And as someone who's charitable, like I want to leave behind a $10 million charitable foundation, right? So again, if I remove all the BS out of my head, all the negative self-limiting beliefs, I think a $10 million charitable foundation is quite reasonable. And even if it generates 6 to 8% cash flow a year, I can probably help tens of thousands of kids in Hamilton every year.
Wow. Right? So you want that fund to self-perpetuate itself long term, so that it covers its debts plus it's able to provide.
Yeah. And my kids don't know it yet, but that'll probably fall to them. But my point is that if I don't do all these things I'm capable of doing, then those tens of thousands of kids don't get help. So it's not easy, but now I have a burden to bear.
Right.
And for some that can be motivating, for some that can be debilitating and causing depression, whatever. But for me, a lot of fear works. Well, fear in my life works for me as a motivator. Right?
I read this quote the other day, and it was, the heaviest thing to carry around isn't gold, it's the burden of unmade decisions. And I thought that was pretty poignant, and seeing what you're doing with the foundation. I mean, like you say, if you didn't go ahead and make that very clear delineation to say, yes, I want to do this because all of these kids in Hamilton, XYZ, right? That would weigh heavy on you. So that's really cool that you're doing that. And the Hamilton Basket Brigade, is that tied into this as well?
Yeah, that's just the operating name for it. But yeah, it'll be for now. Right now, it's just a charity. It's not a foundation. But eventually, we'll hope to level up and make it a foundation. Again, self-perpetuating, self-sustained, pay for itself. It'll all be volunteer. So not a lick of government money.
Amazing.
Yeah, and it's
amazing.
That'll be the job of my kids to deal with.
Love it. Any final thoughts for the listeners as we wrap this up?
Never stop learning. Right? We've talked about a lot of things. We talked about highest and best use. We talked about some pretty advanced stuff with real estate. I think everyone just needs to get started. Don't get started. Doesn't matter whatever it is. If crypto is your thing, buy $1 worth of Bitcoin. Right? Get started. Right? If real estate is going to be your thing, buy something. Preferably talk to someone smart who's not financially tied to your decision. Probably go outside family. Unless your family member's Ryan Carr and has an 8-figure real estate portfolio that's successful, then sure. But go talk to someone successful and ask them how they do it. Right? Get started and then take action. Because the worst thing you can ever do to a potential mentor is not take action on their advice. Because they know exactly what you did and didn't do. And what do you think they're going to do next time you come around asking? They might probably still help. They may still answer questions, but eventually they'll stop because they realize you're wasting their time.
Wow, that's good advice. That's really. Where can people find out more about you? Where can they find you?
I'm everywhere.
Social media, YouTube. Where do they find you?
Podcast, Truth About Real Estate Investing. That's for Canadians. You've been on the show, I think, 3 times yourself. Yeah. Everyone's as good as Ryan Carr or better.
Man, it's great to have you back onto this show. It's been me going to you, now you're coming to me. This is great.
Podcast is probably the best. And I'm on Facebook, I'm on Instagram, I'm on YouTube. Podcast is by far the most popular place for people to get our vibe. But again, folks, go research whatever you choose to do. Learn everything you can about it. Doesn't mean you that stalls you from getting started. But if Ryan and I are talking about triplex conversions as being good investments, that might be a good place to start. Right? You don't even have to invest with us. Be smart.
Love it.
Don't do stupid things.
Be smart.
Yeah. If you buy a new construction condo, realize that will hinder your ability to get financing in the future. It's not a scalable model. It's fine if that's all you want, right? So yeah, I won't poo-poo on anyone buying pre-construction condos. Just understand that's not scalable.
Is there anybody else that you recommend to come on the Highest to Best Use podcast?
Oh, you know them all. If you can get Tasha Monaghan, Sarah Copeland, Susan White Livermore. You want me to keep going? Aaron.
Yeah, hey, you can get them all. We'll make a post and we'll tag them. Be like, hey, you got to come on the show.
Yeah. There's so many, and that's one of the beautiful things about the real estate community is that they're so sharing, right? And yeah, for newbies out there, if you find someone who's not sharing, just move on. There's lots of people who are sharing in this community. And don't ask them to meet your mentor. Just ask them a question.
Awesome. Erwin, thanks for being on the show, man. We really appreciate you doing this. And thanks a lot.
Thanks. Highest and best use. It's the way to go.
Highest and best
investment
use.
Strategy.
Love it. Well, thanks again for listening to the Highest and Best Use podcast. Reminder to sign up to the book at thehighestandbestuse.com. I am your host, Ryan Carr, reminding you that good deals are found, great deals are created. Follow, share, like, subscribe, and we will catch you on the next episode.